All right, greetings everybody. This is Jeff Scott, and welcome to this week's review of markets and some of my thoughts on where we're going for the coming week, and maybe even a few suggestions on some potential stock picks. Again, my name is Jeffrey Scott. My email address is hgsidoc@gmail.com. If you're watching this, then you must have been notified through some vehicle that I posted it, or you found it by just cruising the internet. A couple of things I want to point out. Please vote yes or no, thumbs up or thumbs down if you like this. I don't do this for any other reason except to help people, and if it's not helping people, I want to know. If you look under Show More here, you'll always see a link to a download. So if you'd rather not watch it on YouTube and download a 4K version, typically I record these in 4K, sometimes I may not if I'm traveling, you can download it to your desktop. That allows you to stop it, come back to it, but it's also going to be better resolution. If you're watching it on YouTube, you see this little button here. If I left click on it, it brings up quality, and you can pick what quality you want to watch. Now, unfortunately, when I update this or upload it later today, it's going to upload first in 360 or 480p. Forget watching it when it's 360 to 480. With 4K, you won't be able to see a thing. Either download it or come back in an hour and then change your resolution up to the highest that your monitor will take. Also, since I don't keep a mailing list, it's probably good to just click on the subscribe button. I just hit anybody's here, not mine. And if you click on that subscribe button, then you should get, if you have your notification set correctly, a notification when I post these. And again, I do these pretty much every weekend. I don't think I've missed many in the last 20 years, to be honest. It's getting old though, and I'm not sure if I'm going to keep doing this, to be honest. It takes up my whole weekend. I called today Markets and Chop as seasonality improves. Today is the 22nd. Also, please have a safe and happy Thanksgiving. This will not be a typical Thanksgiving. We actually told my two kids, adult kids, not to come. And we basically canceled most of our celebration, and COVID is still a risk, and we'll talk about that more as we go. This is for educational purposes only. Any recommendations are in the spirit of education should not be considered investment advice. I'm a physician. I am independent. I pay for the tools that I use, and no one pays me to say good things about them or their products. Trading involves risk, and you alone are solely responsible for any investment decisions you make. If I go into any options discussion today, which I may, then keep in mind that options are not easy. You're at risk of losing your entire investment, and I refer you to the Options Industry Console. Now, that said, I like options. It gives me leverage. I control my risk. And, when I protect a position with a put instead of a stop, I have to pay insurance premiums, just like I insure my life. And when I was younger, I had disability insurance. I always have healthcare insurance. Insurance costs money, but if there's a big gap down in the market, a put protects you, while a stop may not get you out into a much lower level. I'm not going to spend much time here. I do it every week, but I've been influenced by a number of people. Many of them are here, and I find their material combined in my own way allows me to be successful as an investor or trader. And I call this to be your own guru, and I recommend that everybody don't rely on third parties, but become your own guru. I own a ton of stuff. I spend most of my day in TradeStation and Thinkorswim. I use John Person's indicators, the Q tools, and some of the Dr. K tools. I have the exact same setups in both, although there's a few things of John's that are not available in Thinkorswim that I actually coded in as extra. HGSI is a great scanning tool. I was talking to John yesterday, and even he called out how he uses HGSI for scanning because it's frankly very stable and very fast. EdgeRater automates a lot of the things that I do. And, I mentioned the names of the tools I use, but I just want you to see this. I'm never paid by anybody when you buy something that I suggest or use. Any affiliate fee offered to me is passed to the purchaser as a discount. I'm an unpaid volunteer. This is just education. Why do I do this then? Well, I love HGSI. I'm friends with the proprietor, George, and I'd like to see the user base grow. So I use it to help support that. And I know I've introduced John Person to some of the HGSI folks that have made money with his stuff. I've introduced a lot of folks to the Q tools, to Sagar and his interesting, different way of using math that is, frankly, it's incredible. I learn something every day with Sagar stuff. And then most recently, Dr. K. And if I can help you, then I'm helping, and then I'm doing the right thing, and I feel good about that. Here's the website for HGSI, the software program. Again, I am independent. I have nothing to do financially with it. Highgrowstock.com, free 30-day trial. Under investing strategies, you'll see hundreds of videos, and you may recognize this user. His name's Gil Morales, very outstanding trader. Stock patterns are cyclical. Again, a split market. This week, we had a good move by small stocks. A fantastic move by small stocks. But you're going to see, at least on the daily charts, the S&Ps and the Dow's got new John Person sell signals. So we've got to still be up here in uncertainty. From uncertainty, we could take another leg up. And as I put in my title, seasonality is starting to be our friend. Someday, do I expect a correction? Sure, we're always going to get corrections. Do I think we'll be higher in 6 months than we are now? Yes. But that doesn't mean we won't go down and retest the 3,300 level, perhaps before we get there. Because of my combination uncertainty and longer term bullishness, I am a little bit more cautious. I'm sitting on a fair amount of cash, but I also have life reasons why I'm sitting in a fair amount of cash. The view that you saw when I turned this on is where I'm building my house on that piece of property with that amazing view in Santa Fe. And I've had a nearly 200% gain this year, which is absurd on a 7-figure account. You've seen my numbers before. My wife told me I should stop showing them, so I'm going to stop showing them. It's been an amazing year. I want to lock in my cash. So I have raised some cash, which means I may mute some of my return over the next couple of weeks. But I am being defensive on my Amazon position, so I've got it covered loosely with puts. But I also sell calls, so my net cost of insurance is pretty much zero. And then I am buying stocks, and I just a little bit more cash than I normally have at this time of year. Now, Friday, this is a picture out of TradeStation, and I'm just looking at the components of each of the sector ETFs, starting here with materials. It's not quite a sea of red. There's some strength in utilities. There was some strength in communications. Real estate was mixed, but industrials were weak. Energy weakened on the end of the week. Financials were weak. At best, I would say mixed, but probably Friday, I would say, was more of a weekday. Let's take a look at the major markets, because there have been some changes here, but changes on the short term. Make sure we're on this is the weekly. Let me change this back to the daily. And let's maximize the sell. So we'll start with the E-minis. So I'm going to look at the futures here. I do the same thing every week. The 17-day simple in green, the 50-day in yellow on a white background, I use blue, and then the 200-day in red. Those colors are consistent in every program I use. Down here, I've got regular volume and OBV. If you notice these white balloons, if you're not a Thinkorswim user, they will show you the lowest on the screen and the highest. I am looking at data for 1 year, and you can see we hit the high of the year, which happens to be the all-time high on November 9th. Frankly, we had a shooting star there, which could have pulled us back, I would have thought, towards that 50. It didn't, but we're gone sideways in chop, and you notice we have a sell signal from John Person came in Friday. If we look back historically, these have been pretty good calls at changes in trend, but it's not impossible to see them flip-flop during chop. So here's a period of chop back in April, and you could see in 1, 2, 3, 4, 5, 6. In about 3 weeks, we had a buy, a sell, a buy, a sell, and then finally we had a buy with the beginning of a new trend. Now, I pay attention to these because they work. Look at the sell signal that occurred at the top of the market here in February. So I'm not going to ignore this. What I like here is we're still sitting above the 17 and the 50. It certainly would not be abnormal to see a pullback to one of those moving averages, nor would it be fatal on mine or your portfolio. But I just think it's something to keep in mind. But right now, I mean, we're in chop. Chop with a bullish twist. If I look at the NASDAQ, we are still in a buy signal here. Then we had a sell. And again, the sell took us right down to the 50 in yellow. And this occurred early in the month. And what have we done since? We've gone sideways in chop. If I look at the Dow futures, and again, the high of the year occurred back here in September, the low back here in March, which is consistent with the major industries. The Dow, as you can see here, also had a new sell signal come in. Will we pull down to the 17 or 50? Sure we could. That's not fatal. Right now we're in chop, and that's not what's happened yet. If I look at the Russell, this is the most interesting chart to me because the Russell back here took out its previous closing highs and intraday highs. And so it's finally caught up to the big boys. You could see the massive move off the bottom. It's now positive for the year. If we'll look at the weekly charts in a second, but not in a sell signal, in a buy signal with a pretty ferocious move off the 50. The VIX, which should be the opposite of the markets, sort of basing down here above where it was basing prior to the run-up and then collapse earlier this year. But really nothing here that shows it's ready to take off. That could always change day to day. And the dollar had a little green shoot here on Friday, but the dollar is in a sell signal and continues to be weak. Now, for the weekly, I don't want to change that one. So let's just go back into the PowerPoint. And keep in mind, even though I show a PowerPoint for some of the stuff, it's just to cut down the time. The PowerPoint was made last night, so reflects current data. You can see on the weekly charts, the S&P is in a buy, the NASDAQ's in a buy, the Dow's in a buy, the Russell's in a buy, the VIX is in a sell, and the dollar's is in a sell. So the weekly is much more supportive of going higher. So we're in a short-term weakness area. We're in a longer-term stronger market. I expect to see chop, yet with the seasonality, it's probably going to resolve to the upside. No guarantee, and clearly we have some countercurrents in the market that could change that. Interestingly, on both the 10-year and the 30-year rates pulled down some, but as I look at these, they're well off their lows, and perhaps it's got to do with the issues with the POTUS and the transition and whether or not there's going to be continued resistance and changing of the guard after the election, but still way off the lows, and both could be still contained in a rising channel up. If I look at the AD lines, both the mid caps, the Russell 2000 in white AD line, and the large caps Russell 1000 are at all-time highs. How can you be bearish in that account? And notice how the Russell has caught up to the 2000s caught up to the 1000, and small caps over the last month or so have gone vertical. If we look at the NYSE AD line, also at an all-time high, a lot of not big moves this week in some of the ETFs. Clearly, with the rates dropping, TLT turned up. And in orange here, this bright orange, you can see the move vertical of the Russell. Really impressive, the move that the Russell has done over the last several weeks. Now, breadth is getting a little bit tasty here, or it's getting interesting. You can see this is the S&P 500. On the left, the stocks above the 200-day moving average are now over 70% with the red arrow, it has gotten higher, but it hasn't gotten higher since 2016. So when you're at the highest you've been for a couple of years, that probably tells you you're getting at overbought areas. Stocks above the 40-day moving average are also above 70%. The beauty is now we've got a lot of stocks where the 40 is above the 200 and the price is above both of them, which is a much more bullish posture of the market. But yes, again, can get higher, has been higher this year, but is getting close to overbought. Now look at the T2121, the quickest acting overbought, oversold indicator, and it pulled down some this week. Now, one question I have is, since we still don't have a lot, but we're getting more new highs, and what we've really seen is a lot of junk off the bottom when you think airlines, casinos, hotels, shopping center REITs, the ones that have been bouncing, energy. They've all had big moves, but they're so far below their previous highs. Are we getting some exaggeration of this breadth? Possible, but I still think that, we're at a point where at least a sideways move would not be shocking. Not sure we're there yet, but something to be careful of. We've pulled back on the S&P, and again, on the McClellan, I look for extremes. No, I look for divergences. We had a higher high. We did not even get back to the old high on the oscillator, so clearly, nor the summation index. Clearly, we have divergences on the daily and on the weekly, the same thing. But nothing new this week. Buckets. 85% of the stocks in the S&P 1500 are trading above the midline of their Bollinger Bands, yet very few are up at the top. So this has actually come off. It's overbought, something that, again, is consistent with we're getting closer to overbought, but we may not be at a point of no return yet. Hindenburg omens, these are signals that occur prior to almost every major correction in the market. The problem is you'll get some that occur that are just false, but you won't get a major correction typically without a signal. You also don't get Hindenburgs until you go back to setting new highs. Well, we're at new highs in the market, so I am looking for Hindenburgs. You can see here that the number of new highs in the NYSE and the number of new highs in the NASDAQ have both come off some more overbought before this most recent pullback. It was 15% on the NYSE, 12.5% on the NASDAQ. So right now there is no evidence of a Hindenburg omen. That's good. Market tone, we look at the Woody indicator here, all green, which is bullish. When I see the yellow and brown, though, that's a little bit bothersome. It just talks about some underlying risk and volatility in the market. Now, sector strength, except for utilities, which no surprise because they're defensive. Sector strength is all green and utilities are yellow. And again, a lot of volatility in this market. If I go back a few years, I never saw this yellow, this brown and maroon here. And it's a new phenomenon as we had increased risk. Now, if we look at Q, and just to get a sense of the market internals, ignore this one here because this is the intraday one. And when the market closed on Friday and it turned to Saturday morning, the intraday and the 1 day were the same. So what do we see? The market on Friday had 27% of the sectors were up. So we had 3 up: communications, materials, and healthcare. 8 down. 41% of the industries were up, and 39% of the stocks were down. Now, I find this tool real time to be incredibly helpful because when I see a lot of red and my stocks are doing well, it tells me to start to get a little bit defensive. When I see a lot of green and my stocks are doing poorly, it tells me maybe I shouldn't be bailing because the market's going to pull me up. Now, if we look over the past month, it's much more bullish. Over the last 2 weeks of trading, much more bullish. So the last 5 days have been a little bit weaker, but we'll see how, the last 1 day, clearly the weakest, if you look at the 5 day, the 2 day, we'll see what we do this week. But it just gives me a sense that the market weakened some this week. If we look at sector performance in red, 5 days, green, 10 days, and blue, 1 month, you could see that most sectors have been up in each of those time frames, which is more bullish on a longer term standpoint. If we rank the individual sectors on Friday, communication, materials, and healthcare were the leaders. You could also get a sense by looking at the numbers to the right of rotation, where communication was really out of favor. But over the last month, communication really has come into its own. Materials were out of favor and are now increasing as well, but very short term. Because if you look out 5 days, it's a little weaker. Healthcare, big resurgence on Friday. Is that a one-day wonder because of the vaccine news? And then you look here where energy over the last month has been the strongest group, along with real estate, and they both weakened this week. Staples have been weak for some time, and industrials teased us a little bit and have seemed to weaken some, as have financials. So you get a sense of the ebb and flow of the various sectors. Canaries in the coal mine, yes, price lines called bookings. One day I'll remember to change my slide. This is my extended FANG list, and here were all-time highs in late August. You know, if this is a stock, is that bullish or is that bearish? To me, it's bullish. On Wednesday, we had a new person buy signal. We had a mobile breakout from a squeeze. We had a pocket pivot. We have a eureka in the general markets, which was a follow-through buy signal. We've had 2 of them of recent. We are clearly in an uptrend and we're above the moving averages. So are we in a trading range where we come back down to the 50? Certainly that is possible, the 50 being here in blue. But is that a bearish or a bullish chart? To me, that's a bullish chart with good support underneath. Know your news and earnings. I know this is teeny weeny, so let's see if I can make any headway of this. We got some PMI flash on Monday. The red dot means it's important. On Tuesday, we've got some consumer confidence. That should be interesting. And we have a number of Fed heads. On Wednesday, we've got durable goods, we got GDP, we got international trade, and we got the jobless claims. New home sales, personal income, auctions, and we have FOMC minutes. Hard to believe the FOMC minutes are going to say anything except to say that the recovery is slowing down some and we need some fiscal stimulus. Thursday, as we all know, is Thanksgiving, and Friday, surprisingly, there's a little bit of information, but no red dots. Earnings, NIU is one of the electric vehicles. I think they do bikes. That comes out. Just looking here, other big stocks that you might want to be concerned about. Ambarella, Agilent Technologies, and you got some retail signals, Best Buy, Dick's, Autodesk, Nordstrom, Gap, HP, American Eagle Outfitters, Burlington, Factory, few things on Wednesday, and surprisingly, but they're Chinese stocks on Thursday. It's a judgment call to hold stocks over earnings dates. It's bad judgment, in my opinion, to not know when your stock's earnings date is scheduled. A lot of words here. So on Friday, the market closed at the lows, which is never good. S&P was down 0.7%, with technology leading to the downside. NASDAQ was down 0.4%. Dow Industrials were down 0.8%, and the Russell eked out a small gain. If you look at longer term on the week, cyclicals continue their lead, probably driven by vaccine. S&P was down 0.8%. Dow Jones on the week was down 0.7%. Russell was up 2.4%, and the NASDAQ 0.2%. That is a big outperformance of the Russell. Energy was up the most with a 5% gain. It's up 23% on the month. Interesting. Retail also up 5.5%. Seasonality is now positive, and we'll look to counter the headwinds related to POTUS and claims of election fraud. I would think the Republican Party would be better served by defending their 2 Georgia Senate seats in the upcoming January runoffs. Control of the Senate remains in the balance and could be an overhang on the market. Certainly could impact your taxes. The market must adjust to the swings between rising COVID cases and deaths and the emergence of at least 2 effective vaccines likely to be approved in the next few weeks. The markets are forward-looking and appear to be discounting the emerging wave of COVID and looking forward to a recovery in the second half of 2021, which could be somewhat COVID-free. I noticed this week, sitting at support, were a number of COVID plays. Zoom, Zscaler, Shopify, Peloton, Crowd, among others, CrowdStrike. I remain up big on the year and have started to build positions, just starter positions, small positions, in some industries that might benefit with the announcement of the vaccines: energy, airlines, shopping center REITs, casinos, and aerospace. These are small starter positions, and I'll look to add more if this move continues. I listened to my friend TJ Watkins and his Moxie traders, and again, I've made the comments before. He picks up these movements in the market that are fast moves, and he can get in and out. That's not how I trade. And I always give him a hard time saying, yeah, you're going to get that quick run. They're going to roll over. This type of stocks here. At one time, and I've said it before, they're not going to roll over. And I think as we get closer to what will be the end of this COVID crisis, these things are going to have a lot of room to run. So I'm going to start to accumulate them, put them away, and forget about them. They're not growth stocks. I'm not buying them because they have great long-term charts with breakouts. I'm buying them as value plays. And I've also, I'm going to tell you the other truth. The other truth is every time the COVID plays sell off and these things go up, my portfolio takes a hit. And it's usually for 2 or 3 days, then it comes right back up when the stay-at-home plays go back up. I'm trying to mitigate some of that volatility. And I do think long-term. I remember in 2009 in March, I bought Techminco, I bought Bank of America, I bought so many stocks that were beaten up. Their charts sucked, and I knew they wouldn't do anything for a long time. But as the market recovered, these things led, or at least led my portfolio back to happiness. I may be too early, and maybe I'll get out. But right now, I want to build a portfolio of these beaten down cyclicals because, look at the Russell, look at what's leading. It's not necessarily a stay-at-home place. I'm up a lot, and I've started to take off my protection. I've also got less positions. And when I say I'm softly protecting Amazon, I had Amazon deep in the money puts. And the deeper in the money on an option, the much more expensive it is, but the less of the time value. You're paying all for intrinsic value. And if the market starts to go up, I won't make any gains until I get back to my put because it's almost got a delta where it's 1 for 1. So I'm now, by softly protecting, I bought a out of the money put to protect my Amazon puts, I should say, and I sold out of the money calls to pay for it. So it's softly protected. Again, have a happy and safe Thanksgiving. Yes, I know we're 28 minutes in and I haven't done anything. Well, we've done a lot. We've had a chance to address the market. And those who've watched me before know I'm all about the market and the industry groups because if the market sucks, you're not going to make money. This view is literally my porch or whatever they call it there, outside my living room, my living area. And we just look forward. We got a fireplace and our hot tub and outside kitchen. I can't wait till my house is done because I'm just going to be sitting there watching the view. I love it. And pretty soon, I guess they're already having snow there now. The ski basin's out here as well. Let's look in very quickly in TradeStation. And let's just look at the thing I look at the indexes with. E-minis. So I look at 6 or 7 things. Notice both the Laguerre RSI and the John Person signal went short Thursday and Friday. On the weekly, we're still long, and on the monthly, we're still long. So short-term weakness, long-term strength. I look at the paint bar. Blue is neutral. Red tells me to be short or hold, don't go long. Green says be long or hold, don't go short. This is the Alexander Elder Impulse Indicator. We're blue, we're green, and we're green. So again, this is short-term weakness in a longer-term move. Look at the move, would you? Unbelievable. Where are we at in the envelope? We're at the upper part and we came in. So we've eased off of some of this over exuberance. All right. These red dots here that we now see on the weekly are MACD divergences. And typically when I see them, it tells me that the market is going to probably roll over, and those MACD divergences have now resolved. Now, this here is my high jump indicator, and when it gets to be 100 or above 95, the markets almost always sell off. So look here, down, it was 94.24 on this date. No shocker that the next day we turned down and it dropped down to 87. That was my big signal that it was time to take some profits. If I go back here, it was only 75% here, even though it was so extended, and it's where it closed. But this was the day that told me, and you could see it on the chart. You don't need me to show you the number. When we get a peak up at this level, you want to take profits. Here's the weekly bongo. It's green. And here's a Laguerre RSI that also the next day or two showed a sell signal. I think this is short-term weakness. I think we go higher, but I'll wait for the markets to show me that before I make an assumption. Now that's the E-mini. If I want to look at the Dow, it might look similar. And it does. We never got to the top, but we did roll over. Well, actually, we did get to the top here on the high jump. And the high jump here was 100% on that same day. Again, evidence that this market was getting extended. The NASDAQ won't look as bad, and the NASDAQ is still in a buy signal, but notice these red dots are accumulating. Now, why is that there? Well, you notice the peak here on this MACD at this high, and then we have a higher high here, and the peak is lower. Hence, these red dots pop up. We're nowhere close to the high jump here. We're still in a buy signal. So this is much more supportive of the market going higher than the S&P and the Dow. If I look at the Russell, way up on its envelope, it's got the red dots, but it's in a buy signal, has been in a buy signal for quite some time. But look where the high jump is. It's come off of it a little bit, but it's been booking right around 100. It's dropped off the last couple of days, but the Russell also got extended. I look at this and it says, don't be surprised if there's a little bit more sideways or short-term weakness, but I don't see anything here that this said this market is totally broken. And I'm a little bit more longer-term thinking and looking at the weeklies. Now let's open up HGSI and do a little bit of top-down analysis. Let's open up my designer view. Now, the problem with the 4K, and I love the 4K for me, is that I'm sure it gets hard for you to see some of the symbols and stuff, so I'll try and call them out. And I know that Ron has some new smart groups or new user groups. I haven't loaded them. I saw that video came out. I haven't looked at it yet. So I'm still using his old market analysis groups. Let's go to Major Markets Plus. Now, I've added to Major Markets Plus. And what I added are, you'll see when I talk about them, I added some IBD ones, and I added a FANG one. So I look at top-down review. I have 28 because I added things. I make sure I've ranked it by raw combo. What does raw combo mean? There is a thing called the combo rank here. This is the top-down combo rank. It looks at a number of factors. It gives these factors a relative weighting. That leads to a number. The number is meaningless, except a higher ranking number means it's more positive than a lower ranking number. So I try, the ones that have the highest raw combo are the number one based upon those criteria. So mid caps, commodities, treasury bonds, oil, Russell, and then the IBD 50. Okay. And on the bottom, we got TBF, we got the big stocks, S&P 100 utilities, S&P 500, NASDAQ 100. So small stocks, mid caps led, we know that already. If we look at 5-day move, gas and oil were up over 4%, small caps were up 2.6%. The thing that got hurt the most were gold miners, utilities, treasury pro shares, all down more than 2%. And we look at 1 day, you can see the S&P 500 and 100 were hurt. So I know right away that based upon the fact that the NASDAQ did not have a great week, that the FANGs did not have a great week, that the small caps did not have a great Friday. Excuse me, I didn't say that. Small caps had a good week. I probably had a mediocre week. It wasn't that mediocre, but it wasn't as good as some of my recent weeks. So let's take a look at some of the major market ETFs. We'll start with the S&P 500. I'm going to make these a little bit bigger today. All right, getting everything set up the way I like to look at it. And let's just open this up, put this on the descriptor. Okay. All right, so here is the S&P 500. Up at the top, these are my Hindenburg omens, and you could see how they were firing multiple days prior to the market collapsing in February of this year. I then have my weekly bongo, which is green. This is a long-term buy-sell indicator sitting on the market that's still very supportive of higher highs. The bongo daily is a short-term. I don't use it as much anymore. But when the long-term is green and the short-term goes red, it's a signal of a pullback that I can scan for. Accumulation distribution is yellow, which is a C, if you're thinking A, B, C, D, E. The high jump bar, you could see that we are near the top of the high jump bar, which we know from the prior review. There was no viable gap ups. You see very few of those on the markets. Then I look for a squeeze today, a mobile breakout. Down here, this is a person buy-sell indicator, and you could see the arrow here is the same. This is the person market catcher. Then the window that looks for Eurekas and Phoenixes. Eurekas and Phoenixes are the follow-through day to the upside and downside from HGSI. These are calculated on the NASDAQ. You could put them on the NYSE or on the NASDAQ. Right now I'm leaving them on the NASDAQ, but I do flip around, and there could be some slight changes related to that. And then down here are kahunas when you see them, which are big moves. Blue is up and red is down. OBV, if we had volume, would be in the bottom window, and regular volume. That's actually regular volume in the bottom window. And I believe if there is volume, you'll have OBV and a moving average in the one above that. Over here is a weekly chart. I look at that for long-term trends. You notice these green lines here. They're harder to see, but they're on the daily. Those are the chandeliers. I use them sometimes as support resistance of when I'm taking a trade, but they also are something that I look at to know when to get out of a trade. And I look at the kahunas here. This is actually John's indicator. Let me change that. It's an older chart. It still says my name. That doesn't matter. This is, actually is John's indicator. We were doing some demos in the beginning and I wanted to show John, but so that's John's per person, not mine. And then relative strength versus the S&P. Well, you're not going to see anything here because we're looking at the S&P. So low close doji on the daily. Yeah, there's the doji and I close below it. I don't pay that much attention to them. I pay a lot of attention to the weekly low and high close dojis. Yes, I pay attention that there could be some short-term weakness. It's a very important signal. But I'm much more a longer-term trader, and I look at the weekly high close and low close, especially to find good positions to buy. When I look at this, it's almost to me that we've got amazing support here. We've got an 8-day exponential, which is due for, I haven't introduced. I've got the 17-day and the 50-day underprice. I've got the chandelier stop here. So could we pull back to 34.50? Sure, we could. Is it the end of the market? If we do, absolutely not. Frankly, you could even argue, and I'll take that it would be okay too, that we could probably put a box here down to about 3,200 and say, you know, even that would not be a shocker. So right now, if I want to be bearish, I'm going to say we're at the top of the trading range. Clearly, the market has weakened. And so what is the most likely thing that we do here? My thought is the most likely thing is we pull back into this area of support and go higher. All right? To me, that's the most likely. Second most likely, let's take advantage of seasonality. Maybe we'll get some good news Monday and we go on and set new highs. And the third scenario is that we go down and we test the bottom of the box. That will be painful. No question that would be painful. But all we'd be doing is going back to where we were back here in September, and then we could be setting up a rally into the beginning of the year. Those are my three scenarios. I mean, obviously, in the first scenario, no one says that we're going to break out there. And in that first scenario, we certainly could then move around in the trading range, which actually wouldn't be unhealthy for the market. So am I bullish or am I bearish? I'm probably neutral to slightly bullish, but I'm not forgetting that we could pull down to the bottom of this range. I like the fact that I've got a lot of support here in the middle of the range. And oh, by the way, this is the prior high. And wouldn't it be super duper nice if that prior high turns into, I hate when I do that. And actually, I didn't want the arrow, so let me take the arrow off. Wouldn't it be nice if that prior high right here turns into support? So, mixed, cautious, but if I had to pick up or down, I think it's going higher. The Dow Jones Industrial Average, not much else to say. We are right up at the high of the year. No surprise, we're seeing some stalling here. Again, the moving averages are constructive underneath. It has a little wider trading range. Do we go back down to the bottom? We certainly could. Wouldn't it be interesting if we came down to here and turned, we'd set up an inverse head and shoulders? I would say my same thoughts are what I have on the S&P. If I look at the Russell, look at this move the Russell's had. The laggard of the year is now the leader. Look at the positive week we had on the weekly chart. Look at the relative strength bounding above the S&P 500's relative strength. Trading also at the high of the range, but you notice this is different, okay? This is different. This one, if I had to say what it looked like, this one's doing this. It's in a trading range going up. Now, certainly could pull back some or certainly go sideways, but that's more the most bullish of the indexes. And then we'll close on the NASDAQ. Again, like the S&P and like the Dow, trading at the high end of its range. It's right up at the 161.8% fib extension. Higher highs, higher lows, kind of flat on the highs. Draw this. There's the highs, and I did it again. When you hold the shift key and you draw, it'll go a straight line. You want to let go of your mouse before the shift key. Down here, I could potentially draw something. I don't want that to be a fib. Let me kill that. I want that to be this. Be interesting to see which way that wedge resolves. But again, that shows sort of a downside risk, limited upside if it stays in this range, potential for breakout. So I would say that the Russell is the strongest looking of the indexes, followed by the NASDAQ. I mentioned some IBD industries. Here's an actively managed ETF of the IBD 50, and the IBD 50 changes on a weekly basis. So this updated. This hurt. Big drop in the market here. Now, was that a shot across the bow before the market rolls over? And I bet your portfolio took a hit there as well. Mine did, because I had a lot of IBD 50 stocks. But notice we bounced right back above the moving averages. And is this more bullish than bearish? To me, it's more bullish. We had a mobile breakout on Friday. So if I look at the IBD 50 ETF, I think it goes higher. That's bullish for my portfolio. I still have to figure out the difference between the IBD breakout opportunities and the IBD 50. Look what this did. It had a shooting star here. It's almost back. So this one is actually leading the breakout opportunities and actually had a person buy signal. The FANGs, as I showed you earlier in my PowerPoint, sitting right on their moving averages, that to me as support could lead to a higher high, hopefully. But to be fair and to be balanced, a breakdown here would be very worrisome because there's no, I mean, you got some support right there, I guess. But when you break down below that, where are you going to go? So I think this certainly bears watching. The dollar, we know is weak, but let's just look at it in HGSI. Bouncing around here. Now this is where it's bounced before, but it's not had much of a move. The volatility, also low. Dollar's weak. Gold should be to the moon, right? Nope. Interestingly, gold has not responded to the weak dollar. In fact, the weekly bond goes down. Gold has been in distribution. Silver, also not really responding well, right underneath the 50 with bearish looking technicals. And then gold miners actually looked a little bit better at a place of support. You know, they pulled, not better, but they're at a place of support and actually bounced a little bit on Friday. I think this is an important line in the sand. This could be this is the 200-day moving average. This could turn out to be a nice place for gold miners to rally, but a breakdown here would be bad. If I go into industry groups as part of my top-down analysis, you can see I have 175 groups there. And if I go to 2-day force up, I got 59 up. 2-day force down, I have 21 down. So some of those COVID plays, cruises, airlines, REITs, exploration, payment processors, department stores, restaurants, aircraft parts, some of those things that I started nibbling on Monday sold off on the end of the week. So that's something I may need to be careful of. And maybe this is just like all the other times, and I'll show you what I mean by that. Let's just look at Carnival Corp, which is the first one that comes up here. You know, TG, you know, he really has something with that moxie. Something to go look at, something that I've used, and I use for short-term moves. Ran up, but it came back down. Ran up, it came back down. Ran up, looks tempting, came back down. Lots of little ones. Then it ran up here, and my comment about Royal Caribbean was, let it stay above the 200 and I'll be interested. It came back down, but it didn't come back down all the way. Now it broke up here, and it stayed at the 200-day, despite, I believe, a secondary offering. So are these done going down? I have no idea. But had I bought them any time down here at this space, I'd just be waiting for them to take off. And if you look at it here, you know, you're buying it at the low. And interestingly, the relative strength just surpassed the S&P 500. Something to watch. Let's go back. So this is the group cruise lines, and you could see its relative strength breaking over the S&P 500. So let's look at the up movers. What led this week? Automobiles. I'm always making sure I'm ranked by my raw combo. Right click, change index group. Tesla finally gets noted that it's going to be added to the S&P 500. It's at an area of prior resistance. So is it going to go higher? Of course it's going to go higher. Everybody knows it's going to go higher. But I wouldn't buy it here until it breaks above 506, 507. Simple reason. It's failed there before. It's just a few bucks away. What did we close at here? 490 something. We closed at 489. I think you wait until it clears that line before you go long again. It's one of these, it's a beautiful breakout and probably goes much higher, but I'd rather buy it when it's breaking out, not when it's breaking down. And look at the fundamentals. Now you've got some earnings per share and great earnings per share growth. And this will be like Amazon. These continue to maintain great growth, and you'll see the multiple start to wiggle its way down. So welcome to the S&P Tesla. NEO is one that I own, and it's getting kind of frothy here. Really was frothy up here. Now, I will go into my trade station, and I will pull up NEO, and I will see that it's been running its high jump for a while, and it's at 88.10 here. Back here before it pulled back, it was at 82.20 the day before, because it's a close. It was at 100% here. It's not a coincidence. When you're the most extended you've been in over a year, you typically get pullbacks. They don't have to be breakdowns. They can be sideways pullbacks. So NEO looks amazing, but it is long in the tooth. But it's running the wave, and they actually have cars that they produce in China. So I am long NEO. Then I get to the lesser quality names, perhaps. Solo has broken out. I don't like this huge topping tail. Look at the volume on this thing. On Friday, the volume was 162 million. Back here, which was a good day for the stock, the volume was 52 million. And back here, the volume was 182,000. Clearly, the entire world of EVs have been carried by Tesla and by NEO. A lot of these are EVs. The next one down here, Arcmoto EVs, giant run up. And I will remind people that here's what these charts like to do. Not saying that will do. This is a great stock right now, Plug. It's not an EV, but it's in the renewable energy category. And it's one that I'm long on. Okay, great time to buy it down here at about $6 a share. Great move up to 26. So let's go back in time. Here we go. And let's look at the pattern here. Back here, it's got how many shares traded? 6,500,000. Then it starts to get interesting here, and you've got 4 million, 37, 52 million. It runs up, it comes back. Then it starts to get interesting again. You've got 55 million, 15 million, gets light again, lighter, and then it gets interesting again. 33 million, and on this date, which is the day I sold, 244 million. I remember that day I went to a tick chart on a stock and had a very tight stop that I trailed, and I got out after it gave up a little bit of its gains. All right. It was $5 in 2014. Got down to $1, $1, $2, $1, $2. And now you get to the current year, and the stock was still languishing less than $4, and then it had its great run. Now, is this, when I go and I look at something like this, does this remind me of that plug chart? Absolutely. It makes almost no revenue. makes no money. It has a current market cap of 550 million, so it's still a relatively small cap. Very little institutional owners. Its return on equity is minus 126. It's priced at 212 times its sales. This is not a value stock. This is a hyped up Robinhood. Yes, it could go to the moon. I would bet you dollars to donuts that this is going to come back down and base and give you a much better place to buy. Sorry that I went into my tirade. I just get nervous with these stocks and my son and other Robinhood investors. Here's NIU, but NIU made money. NIU has revenue. So the EV space has been hot. Electrical power and equipment, Blink Charging. I know my neighbor loves this stock and she's done great with it, and we've talked about it here multiple times. You had a buying setup right here. We had a great setup right here. We had a double kahuna here. These were great times to buy. Up here, not such a great time to buy. Has had a huge run. Are they going to set up a national line of chargers for EVs? That could be a great business. So maybe this is a great story. I have no issue with it. I have an issue with it's too extended. GE, I know it's moved, not mine. Generac, probably one of my best picks of the year. I gave it to you down here. I think I gave it to you on this date. And of course, it broke out before you could buy it. But it turns out buying it at about $100, $105 turned out to be a good buy. It's doubled since May. And it's given you a fresh new buy signal here. Mobile breakout from a squeeze. If it breaks out above its chandelier stop, I'm going to add to my position. It's got earnings per share. It's got earnings per share growth. It makes money. Its revenue is strong, going up despite COVID. And I continue to like Generac. I will typically go through the top 10 groups. Renewable energy. There's a story here, isn't there? Fuel cell. Man, I'm kicking myself in the butt. I spotted this a couple weeks ago, and I should have bought it. It's a cheap stock. It's beginning its big move up, and it's now turning into the others, 99 million shares. It has some revenue, relatively flat. It loses a lot of money, but perhaps it's losing less and going to turn around. It clean power plants that generate electricity, twice the efficiency of fossil fuel. Perhaps it's an interesting story. It's had a checkered past. It's had big run-ups before. You could see it got as high as 30 back in 2017. This is reminiscent of what my tandem looked like. I should have looked harder at this. I just have a hard time buying small single-digit stocks. Fuel cell, is it too late? Use your own judgment. Solar Edge. This has been a great stock this year, certainly a big leader. You're going to find something with a number of these group. They pull back to free parking at the 50. They had a mobile breakout the day before. John Person buy signal. They're looking kind of ripe here for a buy. If you bought it on free parking, here you made money, here you made money, here you made money. I like buying things off the 50. I might set a stop above this and take it if it moves up. I like Solar Edge. Plug Power, I like it too, but I want to buy it here off the 50. Mobile breakout, new person buy signal, a pocket pivot, and a kahuna. That's why I bought it. All right. It's kind of run already. Sunrun. This was a major leader this year. Mobile breakout from a squeeze at the 50. Right below the chandelier stop. That's a pretty easy one for me. I like it. It's on my buy watch list. Got to get above the high of the day. The high of the day was 62.87. So I'm going to set an alert for about $63. And I'm going to be interested if this thing breaks above 63. And I did it again. Low risk buy point, in my opinion. Why? Because I can put the stop probably below the low of the prior day. And if it breaks down below that, I want to be out. Sun Run. Jinx. Same pattern again. Now it's above free parking, but it had a squeeze. It had a pocket pivot. It had a kahuna. I like to see it trade above the high of the day, but that looks interesting too. So here's a group that was a big runner that's given some signals that we might want to be buying. Again, here is the same garbage pattern, right? I'm sorry to be a broken record. I've seen too many people lose money. SPI, there's no story here, okay? Yes, it's in the solar group. Buy it because it's in solar. Buy it at your own risk. I'm okay with that, especially with the 50-day rising here. Put your stop below the 50, go to town. What I'm not okay is that this bar here. Why did this run up from $3 to 48? Because they mentioned that they were going to start to build electric vehicles. And what did it do? Came back down as fast as it went up. It went sideways. I think it's going to run again. Is it junk? Probably. But look at it. I got a sitting right above free parking, 2 kahunas in a row, which I love, a mobile breakout from a squeeze, and the weekly bongo's still green. It's a junk stock. I wouldn't be mad at anybody that bought it. I just know you're buying junk. E-commerce discretionary. I guess this meant it was risk on solar stay-at-home stocks up day, because that's what this is. Alibaba, horrible pullback. A lot of news about what we're going to do to them, with the Chinese regulators with their ant IPO blocking it. Big move up on Friday. It's still in a downtrend. Probably an early place you could consider buying. I'd rather wait till it gets above the 50 and holds. Pindaloo, this was a recent buy of mine. Then, of course, it runs up. I'm feeling great. I actually took some profits, and then it announced the secondary. But despite that, it's still doing fine. But would I buy it here? It's a lot less attractive than it was to buy it back here with 2 kahunas in a row and a mobile breakout. Jemiah. My neighbor actually had this, and I remember we were walking our dogs, and she was lamenting about this. And I remember I did a call back here, and I said, this was probably the Friday, based upon this right here. I said, I'm going to make my neighbor happy. I think we should be buying Jemiah. I think Jemiah looks good here. An African eBay or Amazon, and it's really done nicely, hasn't it? It's had a nice takeout the recent highs, still not up to the past highs. It's pricey now. I don't think I'd be chasing it, but I have a position there. Kahunas, 2 in a row. Eureka said the market's turning around. This is the end of day chart with a mobile breakout from a squeeze. The next day was a viable gap up. That was the day to buy. Took out the chandelier stop. You could have bought any of these 3 days and done very well. It's a lot harder to do well today. Mercado Libre, I can't even look at this stock. It's so expensive. Net Element, kind of a crappy looking chart, but a nice breakout on Friday. Again, it's already moved quite a bit. Junky looking chart would be my biggest concern. Etsy, another stock that's done great with the stay-at-home crowd. But I'll tell you, it was doing great back here before we even knew what COVID was. So it had a gap up on Friday. This was a nice buy opportunity, sitting down on the 50. Probably still buyable here. Yes, I'm talking my book. I have a position here. Look at the earnings per share growth, much greater than the multiple. Overstock. There used to be a play on Bitcoin, and Bitcoin is hot right now, which makes me interested here. I feel better if it was breaking above the 50, but I'm going to be watching that closely. I like that it did have a high closed doji. Again, just to be clear, high closed doji on daily or weekly are important signals. I just find a high closed doji on a weekly any signal on a weekly is more impactful to me. I know we're a little bit over an hour, just got a little bit more to go. Netflix is getting, ripe here. It's about to go into its seasonality period of the year. Buy signal with John, mobile breakout from a squeeze. Expensive stock, but it's been lagging. Investment companies, let's look at this really quick. Forget it. These are the SPACs. Things like, here's one. These are all investment vehicles. And then they get, this one's in EV world. It's a special acquisition company. I'm not even sure if they bought anything yet, but they're the right name, Auto Holdings. They're set up to buy things. Well, you had a Bible gap up, a mobile breakout from a squeeze, and a kahuna. That looks like a very attractive entry. High close doji on the weekly, but they're not real companies, are they? Some of them turn out to be real companies, and maybe we should buy them all. I just don't know what to do with them. Look at interbase services. Oreo. Shocker. They make lightweight EVs. Oh my God, all you gotta do is say you're an EV. I think I'm gonna change my company and say we're an electric vehicle company, manufacturer, and go public, because all of a sudden you get a big valuation. Let me guess, how big is the volume on Friday? It's only 135 million shares. I'm not even gonna say anything. I'm not buying that. Shopify, basing since June, sitting at the 50. Chandelier stopped there. New John Person buy signal. Looks kind of interesting here. Earnings are already out. There's some good stocks here, so I'm going to go very quickly. Trade Desk, this is involved in serving up digital advertising, if I remember. Too far gone. When this stock's at the 50, look to buy it. It's been a great buying time forever. Fiverr, another web-based marketplace. Great move. I can't buy it up here. I got to wait for it to pull back. Zillow Group, it's buyable here. We know real estate is hot. Pinterest, I have no idea. I don't understand this company. It's another one of these social media companies. So you can see what's hot. Zscaler is one of the stay-at-home stocks involved in some of the video. Securing connections, sitting right on its 50-day moving average with a mobile breakout from a squeeze. So we're kind of concentrated there. Electric vehicles and online shopping look good. Let me go into my buy watch list and then talk about a couple and then say goodbye. I'm getting tired, and I'm sure you're sitting here going, we're tired of listening to you, so shut up already. Well, at least you have the ability of hitting the stop button. So, for those that are newbies, I call this a buy watch list. What that means is I'm going to go into TradeStation and I am going to dump these stocks into some watch lists. I'll just show you this one, for example. And I'm going to watch these, okay? Now, a watch list is boring. How about dumping them into a radar screen where I can monitor? Here I've got 600 stocks I'm interested in, and I'm monitoring for various symbols. On one of my other machines, I'll have the same watch list, but I'll have John Person signals. These are the Q and some of my own signals, okay? Well, I don't have TradeStation, Jeffrey. I can't do that. And my answer would be malarkey. This is Thinkorswim. I go to MarketWatch, BuyWatch, and I'm monitoring the stocks I'm interested in, all right? So I monitor them, and when I get signals to buy, I will take them. Notice how many application software companies I have. These are moving right now. Let me show you a couple. Probably my favorite chart of the week, or one of my favorite charts, is digital turbines. Why do I like digital turbines? I'm a sucker for earnings. Look at the earnings per share growth here. Okay. Look at the revenue growth. 30 million in December of 18, 36 in December of 19. We're at 70 in September. We're having a steady rise despite or because of COVID. I like that. I've pulled back towards support. Now, it was a better buy a couple days ago. I had a mobile breakout on Friday. Person market catcher, interestingly, turned positive. I had a new John Person buy signal on Friday. It's not at its all-time highs. It is not at the top of the high jump bar. It had a high close doji on the daily. It's under demand. I like digital turbine. Take Two International, GameStop. I guess it's a good time of the year for GameStops. Run up, sideways move, breaking out off of the 50 with a mobile breakout from a squeeze. Took out the chandelier on Friday. John Person buy signal in place and pocket pivots. And I guess if I wanted to show you this, Person market catcher, positive divergence or convergence, less negative despite a sideways move on the stock. I like Take Two International. Zoom. What do you want to do with Zoom here? It's the ultimate stay at home. We know New York schools are going to go home. It's a debate across the country. Well, if I wanted to buy Zoom, and I'm not sure I want to, it's an expensive stock, but it's well off its highs. It had a new person buy signal and a mobile breakout and a pocket pivot on Friday. I would be concerned about potential some resistance here. I'd rather buy stocks above the 50, but Zoom is another one of these stocks that looks like it's ready to roll. Notice I did put that little EV company on here. Sometimes I can't resist being like my Robinhood son. Regeneron. Lousy looking chart, right? I agree, it's a lousy looking chart. It happens to be a great company. Ignore the next quarter zero because it makes money. It's got earnings, positive earnings. Why did this even make my list? One, they are a COVID play. Number two, I got a green candle low at the bottom of its range. Let's go into here. And I know this is long in the tooth. Maybe I won't do one next week because I'm going so long on this one. It sounds like a good idea. Maybe I should enjoy my holiday. Look at the divergences, the green here. I got to, on the low jump bar of minus 100. And then this has got the elder indicator, but that's a green candle closed higher than it opened, and it's a green candle low. That has been a very effective reversal signal for me for a long time. So I'm going to watch it. Now, like the last stock, it's going to, like Zoom, it's going to have a lot of risk of resistance here. But if I wait till it gets above the 50, it's going to run $60. I think Regeneron's an interesting stock. Watch it. Don't go out and buy it just because I called it out, but I'm interested in that. Acacia has been going sideways forever, and it looks like it's breaking out. I'd want to read the news and make sure I'm not missing something. Yes, it was a better time to buy it here, but I didn't. It's up a couple bucks from that point here. Look at the scale here. It's great earnings per share growth, so that looks interesting. We already talked. Here's JD.com is another internet-based e-commerce story. Great uptrend. Earnings came out at pullback here, gave a nice opportunity off the 50. It's moved up a little bit, but it's certainly not yet extended. We talked about a lot of these. Teladoc, another stay-at-home play. It's been clobbered since a recent acquisition. It's coming up off of the 200. Interesting place. I might wait for it to regain the 50. Car Gurus was another one that looked interesting. Look at the person market catcher. The stock kept falling. And what has the market catcher done? it kept getting stronger. It's turned positive. Had a new person buy signal and a mobile breakout down here. Great group strength. It makes money. Car gurus. We know cars are hot right now, if you can find them. Quidel, man, I made a lot of money on this stock. Thank God for puts, or I would have lost a lot of money on this stock. It's pulled back down to the 200. It's a risky stock here, but I remember how much I love earnings. Look at these earnings. How in the world, if this stock makes its earnings, $1.77 plus 568.6, 745 plus 961, $14 plus $11, $25 a share. That means it's got a multiple here of 7 to 8. How does a stock growing 900 times have a multiple of 7 to 8? It won't. Even if it keeps its 19 multiple, if it makes these earnings, the stock's got to go higher. So I'm going to keep a close watch on Quidel and look for some positive momentum before I jump in. Anything else I want to show you? Again, a lot of these you've already seen. Ollie's is another retail play. Looks interesting here. Bounced down to the 50. Yes, high risk, but interesting buy point. It's now broken above the 50, and it's a chandelier stop with a mobile breakout from a squeeze. So I guess the message here is there are stocks to buy. Peloton, here's another stay-at-home play. Well, you're buying it on the 50. The mobile breakout, a person buy signal, and a pocket pivot. And lastly, and it is time to go, FND, another retail play. And there's been a lot of people in the shopping, in the parking lots. Big uptrend, sideways move, broke out above the chandelier on Friday, mobile breakout and a squeeze, new person buy signal. That looks interesting as well. So there's a lot of fun stocks out there that look interesting. I do think we're going into a seasonal better part of the year. And I'm just going to close with one quick picture, not of my backyard. I'm just cleaning this off. Edge Rater is a poor man's seasonality tool. So I run seasonality and Edge Rater across a big universe of stocks. And it doesn't have all the flexibility of some of the $3,000 to $5,000 seasonality tools on the market. But here is the 1 month seasonality, bullish and bearish. Let's look down at the bearish ones. What's bearish? TZA. So a bear small cap is likely to has a 83% of the time it goes down, because this is in the bearish side, 10%. So if the bearish small cap ETF goes down 10%, 83% of the time, what does that mean small caps are? It means they're going higher. Financial bears, 75% of the times this season it goes down over the next month, 8%. Russell 2000 shorts. If the shorts go down 7%, what happens to the longs? They go up. S&P 500 bears, 83% of the time they go down, average of 6%. If the shorts go down, what happens to the longs? They go up. The Qs, if they go down 80% of the time, the short Qs, that means 80% of the time the Qs go up. So the contra ETFs, technology, and so on and so forth, are very weak. If the contra ETFs have weak seasonality, then that says good things for the market. A couple things that stood out here. I don't have a lot of 100% up, so that's one thing to be careful of. But you see clearly a number of different stocks have big move ups, 10%, 34, 13, 14, 10 in a short period of time, and have a high percentage of being up. And when we're talking about, we're looking at 1 month, this is the window. Now, I'm not nearly as excited by these, to be honest, although TNA, small cap, bullish, 3X ETF, up 83% of the time over the next month, and an average return of 8%. Lululemon, which has earnings coming up, I believe, is up 77% of the time, an average of 10%. So it's 83%, an average of 10%. I was looking at the wrong one. I apologize. I was looking at the score. I think that this is a seasonally strong time. On that note, I want to say goodbye. Happy Thanksgiving. Be safe. If you bring your kids home, wear masks. Don't need anybody getting sick. Goodbye, everybody. And that wasn't a political statement.